Hey YouTube, we're going to do another global macro update here very shortly. Just going to post on the Discord that we are starting our global macro update. All right. Hello traders, welcome to another global macro update from the Performante team. Like always, we're going to go over gold and silver ratio real quick, as well as a index, the SPY, and the US dollar, and then also some news topics before getting right into the charts here. So first off, we're going to do a quick little analysis on COVID-19. With our first discussion of the day, we do see that there is 372,563 total confirmed cases. China actually sitting at 81 now for the handful of days here, which is really good to see. Italy is increasing, US is increasing, and the rest of the countries are increasing pretty drastically. Unfortunately, 6,000 deaths, or well over 6,000 deaths on today on the 23rd for Italy. What scares me, they did change this, but what scares me, there was mainland China total confirmed, and then outside of mainland China, but now they just have the global cases. So this is the amount of global cases, and obviously we're seeing some exponential growth, which is pretty scary to see. And then also in the States, they separated it into, I believe, city. That's a lot of information. We can see it is by city, I believe. Yep. So then it's more dispersed kind of throughout the entire country instead of just having one in each state like we see in BC. And the rest of the states here, or rest of the provinces, you see it's just a calculation of the entire province, but then in these states, you have single cities, like we can see right here. So, yeah, obviously it's spreading pretty dramatically here. Not much more to talk about. I don't want to dwell on this too much. Total recovered 100,000, which is good to see. Next thing we're going to be going over is just some basic things I'm sure everyone's talking about if you are not living under a rock in terms of the finance world. Fed are basically doing whatever it takes to try to stimulate the economy or try to not to get into a Great Depression, basically, like we saw in the 1930s. So central banks also sets out $300 billion in new lending programs to help all corners of financial markets. So they're really going all out here, and they'll talk more within this article, saying aggressive action was needed to soften the blow of the economy from the coronavirus pandemic. The Federal Reserve on Monday announced it would purchase an unlimited amount of treasuries and securities tied to home and business mortgages to ward off a credit crunch. Unlimited amounts of treasuries and securities. That's pretty crazy. The Fed said that it would buy assets in the amounts needed to support a smooth market, or to support smooth market functioning and effective transmission of monetary policy. The Fed had previously set a $700 billion limit for asset purchases. That was a previous limit. Now they just said there's no limit. We will do whatever it takes in order to try to bring the economy into something other than a Great Depression. They're going to do whatever it takes to try to stimulate the economy the best they can. In addition, the Fed announced several new lending programs worth $300 billion to support all corners of the financial markets, like we stated before. So the only parallel that comes to mind with the ECB's chief, Mario Draghi's whatever it takes moment, except that these are not just words, said Robert Perley, is a former Fed staff, now an analyst with Cornerstone Macro. So the $300 billion size will get bigger once Congress approves the stimulus package under negotiations, he added. So it's only going to get bigger from here, it seems. Another professor here, Jeffrey from Bergstrand, professor of finance at the University of Notre Dame, said that there are two notable differences with the Fed's response to the financial crisis of 2008. So he's kind of comparing what happened in 2008 with the financial crisis with the mortgage-backed securities and what we're seeing right now. So right now, the Fed is acting more quickly to try to ward off layoffs and using all available channels to generate liquidity, which would include treasuries, commercial paper, corporate bonds, municipal bond markets, all that stuff, and then buying assets across the board. So just really providing as much liquidity as they can, buying up everything to try to create more demand and try to create more stimulus for the economy so it doesn't completely seize up. It is the speed of the expansion across the board array of assets that is unprecedented, he added. The Fed said it has to act because it was clear the U.S. economy will face severe disruptions. We got one more thing here. Lawmakers are working on a stimulus package that includes using the Fed to get lending out to firms hurt by the shutdown of the U.S. economy. Treasury Secretary Steven Mnuchin said that this program could result in $4 trillion of liquidity. Wow, hey, that's a lot of money. So you're probably thinking, there's so much money coming into the market. Wow, BTC's looking not too bad. BNB is kind of my entry here for a potential. We were maybe seeing if we're going to be able to go here. Might be stopping this shortly if I do get an entry, and then I'll talk and continue. But we'll see how it goes. I am looking at it on the smaller time frame. I'm quickly just going to change the BTC charts into a smaller time frame. It does look like we could be seeing a little bit of a move here. Let me just pause this for a moment. All right, so on the actual recording, we are currently paused because that's what I'm going to be posting on YouTube. But right now, we see BTC making a move to the upside here. If it's able to break this current level of resistance, I think that we're going to go more bullish bias because we've seen this hold before many times. And if we're able to break this zone, we got 44 minutes until this 1 hour candle closes. But I just wanted to take a really good look here, see the volume, see the 1 hour, and kind of focus my my mind just on what's happening right now because it's pretty important. BNB is going to be my possible entry here if we do get a push up. XRP, not really. Ethereum's definitely not. Still holding that as my short, and then this might be my potential long here if it actually does push to the upside. So we'll see how it goes. I think I might start up again, but BTC obviously does look like it's pushing up again even greater. Really going up to the extension, the high levels of the resistance zone. So I'm going to go to my Binance here. Go on BNB. Let's take off all the drawing tools. Not a perfect trend line, but it'll have to do. And then just put that right there. So I'm basically looking at this price action pattern on the 5-minute chart, but on my Binance exchange, just so I have a good idea when I'm going to be looking to potentially enter long. BTC does look like it's weakening. We see decreasing buy volume coming into the market right here. If we see a pullback here and then another push to the upside with a potential double top within no demand, that would be a really good entry for a possible short. Other than that, we already have Ethereum as a short on, and then this is looking like it could break here. Let's look on the 5-minute chart for the volume. Yeah, we're seeing strong volume coming in here. How much am I risking? Around 2% from the low. So, yeah, I paused this this moment right here. This is kind of turning out to be a little bit more of a live trade. Potential entry on a small time frame here on BNB. Because if BTC does move up, I do want some level of a hedge, because I've been more short bias here for a while, which is not a bad thing, because we pushed to the downside, breaking the squeeze there, but we got stuffed around 6K and made a move to the upside after the news of the Fed basically printing unlimited money, and we've been kind of in a series of higher highs and higher lows since, but we're not trending significantly, but that bullish candle definitely shows a significant level of buy pressure within the market. Did get a significant rejection touching the higher resistance area right here, and then now we're just trending, grinding up against the resistance area. Not really seeing a major strength coming in, but what I was hopefully looking for was like an ascending wedge here that would potentially push the price down, but we're not really seeing that. We're seeing a bit of a horizontal zone, and I can't really... I could draw that, but that's only 2 touches, and I need one more touch to really validate the area. On the 5 minute, it's not really anything significant. It's a candle closure, but you know, that is kind of how I'm looking at the market right now. So we'll see. Oh, okay, let's just close this. And let's get a new one. So we closed right at that area. Let's see if we're going to reject off. If we reject off, that definitely shows me that the sellers are still in charge. I don't want to obviously enter long there, but you know, we were shorting around these zones here. 1, 2, 3 rejections, came back down. Couldn't break this level 6K support. Came back up. This is when the news kicked in this morning, like at like 5 in the morning, 4:30. So we're just seeing how the price reacts. We got around 40, just under 40 minutes here until the 1 hour closes. Could be a really good opportunity here because we're really close to the high. That would around be where my stop loss would be, 7%. The only thing that's challenging about entering short here is we've known that this is going to hold, this area of support right around here. We broke the ascending wedge, initially broke, retested for a valid level of resistance, 1, 2, but not just twice, 3 times, really validating this zone, seeing a lot of injections of sell pressure. The price was not able to hold below and push breaking, making a lower low below this 6K mark. So if we do get an entry, let's say at this ascending wedge, which is a little bit of a bearish pattern, and we're using the previous support as a new level of resistance, which is also pretty bearish, and also just the overall market obviously is in pretty well turmoil. Looking for a risk-reward situation that makes sense. If we were going to take some profits at the 6K, we would need to be risking maximum, let's say 2.7, 2.8%. Because then we'd have a risk-reward of maybe above 2, and that's something that we'd be able to be willing to take. But if it's not, if we have too much of a risk, the risk-reward is not worth it. So it just doesn't make sense to be taking that level of a risk. You could extend the take profit to this low zone, but I think the minimum that we want, like we've seen here, it might not hit the low, so I'm going to expect to take the first half of the gray area for the support. So we're looking at around 6-7% for a take profit potentially. So then you're looking for maybe of a 2%, 2.5% risk. That would be a really good situation because your risk reward would be around 2.7. That's something that I'd be willing to take. So I think as of now, we're rejecting, so we're not going to get a bullish push to the upside. It seems like we got a nice rejection right here on the 5 minute. Shows very clearly. So I think I'm going to just stick with my previous bias. That's actually a really good opportunity right here for a potential short. But you don't really have market structure confirmation, really. You're still making higher highs and higher lows. You're basically putting yourself in front of a train. You'd want to see a lower low and a lower high if you were going to use this as an entry. A little bit wider of a stop loss, but then you're still looking at maybe a 2 risk reward, which is kind of the minimum you're looking at. But we'll see where it goes. Ideally, we'd want to get that risk down to maybe here. So then if you were looking at an entry here, if it did double top, or if like a major bearish engulfing candle and a nice little no demand or something, you could be looking at a little bit better of a risk. So then if you were only risking maybe 2 or 2.5%, your risk reward is looking phenomenal. So let's see where it goes. It didn't really move up the way it looked like because we were seeing more buy volume come in. I was just a little worried that if it did push back up that we were going to kind of miss that push of that squeezing from the short sellers potentially, because there's a lot of short sellers around this area, I'm sure. So then if it does push up above breaking this zone, I think that's going to be a short squeeze where a lot of sellers are going to be taken out of the market, because as you can see, more short sellers have been coming in. So going to keep an eye on it, but going to continue on with the video. I did pause the recording, so this YouTube live will be a lot longer than the one that's going to be posted on the YouTube. So let's continue with it. All right. So continuing on with where we left off, we talked about how the Fed is printing a lot of money, a potential $4 trillion of liquidity coming into the markets to try to ease the economic impacts from the coronavirus. So then you're probably asking yourself, where is this inflation that people are talking about? A lot of gold bugs and crypto enthusiasts are saying that inflation is going to be the reason why people are going to go to Bitcoin. They're printing so much money, it's going to devalue the currency, but then it is right now looking like it's the polar opposite, where the US dollar is currently looking like a safe haven. It is absolutely destroying every other asset in the market, basically. Bitcoin has gone up substantially, but, it went from like 10K to 5K in a very, very significant amount of time, and we haven't made the high yet. If an asset goes down 50%, it has to make 100% gains to go back to its original level. So you got to look at it on a bigger aspect, right? So the US dollar has been doing phenomenal compared to every other asset class. Now, like I said, you're probably thinking, why is there no inflation? Well, let's look at the velocity of money for the M2 money stock, which is basically the circulating supply of the US dollar. Now, we can see since basically the late 90s, there has been a massive decrease in the velocity of the US dollar. Now, this is a decrease in the circulation supply of money. Now, inflation needs two things. It not only needs the increase in supply of money, but it also needs the increase in velocity, as we can see within this chart. Now, since 2008, we've seen an unprecedented amount of printing from the Fed, and we can see that with an economic stat from the money base, which I will get right now. We can see since 2008, we've seen a ton of money being printed. And now we're going to see the balance sheet of the Fed increase even more because of all this printing that we're talking about. So the reason why we're not seeing this inflation is because, as we can see, since 2008, we've seen a very, very sharp drop in the velocity of the US dollar, of money. Even more than we've seen back in 1959. It's the lowest it's been, in a lifetime, we can see. So there's a formula that's inflation that's not just increasing of supply. You also have to consider the velocity of money. So I will be looking at this pretty extensively. It's only a quarterly report, so it's not going to be coming out weekly, so we won't touch on this every single global macro update, but we will be discussing this because this is a vital part of inflation. And until the velocity bends back where we're getting a higher ratio, I don't think we'll see any real inflation from the US dollar, and the strength from the US dollar will remain strong until there is, in my opinion, a sense of ease within the economy, the coronavirus is kind of well behind us, or at least reducing the spread globally, not just in China, but we're seeing a reduction of deaths in Italy. We're seeing a reduction of spread in countries around the globe. I mean, once that occurs, I think the central banks are still going to be reactive, and it's worked in the past. Look at '08. We've printed this much money, and look at the SPX. It was, theoretically in a great economy, lowest unemployment rate, in records, in history, and all this positive stuff is happening. And, it's like when you do a negative thing and then you get benefited for it. Like, let's say if you're in trading and you don't set a stop loss, it goes down way below than what your risk appetite is, but then it ends up making a huge profit. You're going to assume that not setting a stop loss might be a positive thing. You're getting rewarded for bad behavior, and I think this is something similar. They're getting not bad behavior, but it is. You can't continue just printing money. You can't. That's not how value is made. In the Keynesian economics and in the Keynesian theory behind a lot of the monetary policymakers in the United States, think that is the case. They unlimited amounts of printing. Let's just start the printing press and never stop it. And let's just get through this recession, and things will be fine and dandy for the foreseeable future because it's happened in the past. And that's how they're going to view it. There's no other way. There's nothing they can do other than print more money. That is. So in that said, the U.S. dollar is strong. I'm not going to say that we're in looming inflation territory anytime soon. And we have our next article talking about the U.S. dollar is so strong it's actually causing difficulties in other emerging markets around the globe. So it's becoming a problem that it's surging so high. So surging U.S. dollar is surging U.S. dollar is next big headache for world economy. Had to spell that out there. So we can see this is a really good illustration here. So this is central banks across the world that have cut interest rates this year in 2020. So the bright pink is policy rate cut. That means they lowered the interest rate. So we can see basically almost all of the major countries here are either changing the policy or have already, because we can see Japan, Germany, Sweden, Switzerland, Poland, I think a lot of these countries, European countries, have already had negative interest rates pre-2020. So it's not like if we showed all the countries that have negative interest rates or interest rates close or at zero, so many more of these European countries would, and Japan, I don't exactly know about India, but a lot of these European countries would also be pink. So the majority of the globe is at zero interest rates or negative interest rates and printing money like no tomorrow. So the entire globe is just printing debt, printing credit. It's crazy to see it. As a person who takes interest in finance, this is something that it's a once in a lifetime. I can't say opportunity, but it's a once in a lifetime event that is occurring within the lifetime of basically everyone who's watching this. Unless you're, 80, 90, maybe 70, you're probably going to see some crazy things play out in the world of economics, monetary policy, finance, all that stuff. So that is some interesting news. Now we're going to go on to more of some Canadian news, because Performante team is located in Canada. We can talk about a little bit of, because we already talked about the U.S., some numbers for Canada. Unprecedented 500,000 jobless claims sent Canada's labour market into freefall. So Prime Minister Justin Trudeau said 500,000 Canadians, or around 2.5% of the labour force, have applied for jobless claims this week, smashing previous records and suggesting the nation is already in deep recession. Trudeau said Service Canada has received more than 500,000 applications, 500,000 this week, 20 times the number recorded in the same week a year ago. Unbelievable. So this is the 500,000 applications for unemployment insurance just this week. unbelievable. The speed of the meltdown in the labor markets has no precedent. The largest number of jobless claims for a whole month was 500,000 in 1957, according to Statistics Canada data. So for a whole month, the worst time we've ever seen was 500,000 for a whole month. And then this week, we've seen just that. So we still have, like 3 more weeks until we're hitting the time frame that we hit for the previous historic high, which is pretty scary. Seeing stuff like this. This is going to be the Great Depression of 2020. Try to not get so negative. I know it's challenging. I know if you have a business, if you're starting a business, if you've this is impacting basically everyone. I wish you the very best. Like I said, we have a Discord where if you'd like to talk about difficulties, issues, just want to talk about just things that are happening in life, and kind of person to talk about regarding maybe if you're more interested in finance or kind of possible government subsidies or something that they could help. We are keeping pretty well on top of it to try to help out the people in Canada, at least, because that's where the Performanti team is located. So it's a very tough situation for many, many individuals for sure. The last thing we're going to touch on is we talked about this, but we haven't really seen any of the numbers or anything. Talking about Alberta and the levies and the tax kind of reductions and the support packages for the industry facing unprecedented adversity, which they definitely are. So they're basically going to build them out. The government said they're willing to pay $113 million in Alberta Energy Regulator levies for a period of 6 months and extend the mineral agreements by 1 year, give the industry additional time to raise capital and plan future activities. The thing is, for raising capital, like for example, if a company is a public company and they're trying to raise capital, the oil industry is just getting demolished right now, and their stock price, let's say, dropped 20, 30, 40, 60%, whatever the number is. They're raising their capital at these low market caps. So you can say that they're raising capital, but they're raising the capital, undercutting previous shareholders by, for example, 50%. I paid $50 for the stock. And I paid, let's say, like $50 per share, and then 2 months, 5 months go by, and another person pays $25 or $20 per share. I know it's the markets, but it's very, very difficult to raise capital when your market cap is cut in half. It's a tough situation for them. And then the provincial governments have already extended $100 million loan to the Orphan Well Association. So Orphan Well Association. So basically, they're reclaiming land. They are trying to clean up old wells, which are used to get oil and basically get natural resources and natural gas and all that stuff. So what this company is doing is they're basically reclaiming land, trying to get it back to somewhat its natural state. So what it kind of seems like to me is they're going from a production state to now a reclamation state. So now they're reclaiming the land. They're trying to fill all these wells and go into more of a retracement of the progress of the oil sands and the progress there, because with the price of oil being so low, they just won't be able to make a profit. So then this is a new way of being able to sustain their economic activity, is by not producing oil, but by actually reclaiming land, decommissioning about 1,000 wells, and start more than 1,000 environmental assessments that will create up to 500 direct and indirect jobs. So they're trying to take a different approach. Instead of trying to create more production of oil, they're trying to create jobs by going and taking a completely different approach by trying to fill the holes, decommission wells, and kind of go through about it in a different way. Alberta's energy sector supports more than 500,000 jobs across Canada, the government statement noted. These jobs are currently at risk, and governments must act to do everything they can to ensure energy sector firms remain operating and employing Albertans. And then we see a couple more things here. This is the most significant and disruptive economic downturn in generations. This is what I'm saying is the coronavirus, I really hope it passes and it's not going to be as bad as some people say it is or some people are anticipating. But the economic hit that is going to be taking place here is going to be very, very severe. And we have to understand that, and we have to prepare for it. It's not a joke. It's not going to be light and easy if you're a business owner. It's going to be a challenge for sure. And being mentally prepared, being economically, like personally economically prepared is very important as well. Just reading a little bit more into it. The federal government is also reportedly eyeing a bailout for the industry. Like I said before, not a surprise there. This could include making a significant investment in orphan wells remediation to help both companies and workers in the province. So like I said, they're kind of going from a production of oil state to now a remediation state, which is a very, very different way of approaching that entire sector. So it says, I don't think the industry could survive like this for much more than several weeks, or we'll start to see significant changes in insolvency rates, said Tristan Goodman, president of Explorers and Producers Association of Canada. And I don't think I put anything else in there. So, definitely a really, really challenging time for Albertans, for Canadians in general. I wish everyone the best in terms of the outcome of even if they're employed and if they're laid off right now, the government is trying to provide people packages and EI in some way form. If you're not able to apply for EI, I think they're able to provide another form of EI that will help during this time. So definitely take that opportunity up if you are struggling. Quickly looking at the markets here, BTC rejecting off that zone quite well. This isn't a crypto market update. I'm just quickly looking at it. XRP is going to be a potential. We're going to be looking here, and then Ethereum still is not hitting our stop losses, as you can see. It is consolidating quite well there, but not going to be looking at a crypto market update. So we're going to be going on to gold, silver ratio, and then the black gold or crude oil. First things first, we've already discussed the structure of the market for gold on the Discord, but to do a brief overview, let's go to the 4 hours, some key zones that we're going to be looking at right now. Very, very easily identifiable in my personal opinion. Let's take everything off and start from scratch, just identifying major key levels of horizontal support and resistance. So this is going to be the first major level that we are going to see as a resistance, around 1600. We're at a current level right now, which is right around here. It was a previous support, resistance, potential new level of resistance around 1550, and that's the current resistance we're below. In my view, I'm still thinking that the price is holding this level of resistance. And now that we kind of talked about the 4 hour chart, I think it's easy to go over the smaller time frames because you can see why we put these areas where we did basically. So now we can talk about the 1 hour chart. You can see right at area of resistance, we could just pop it up there a little bit more, and we're basically right under it right now. So we had a pretty strong move here. We were squeezing the support, the rising support, ascending support zone with the projection. Held very well many times, so we can identify that 1450 is now gold's major support zone where it's bouncing up. I do think that this is going to be a correction, and another impulse move to the downside is going to be coming in. Looking at, for example, the 4 hour, let's take that off and just talk about market structure because it is pretty important. I guess we have it right here. So looking at market structure, for one, look how strong that move was. That's an impulsive move. We broke not that resistance, but this was all three supports, we broke 1, 2, 3. Without real hesitation or anything, right? So that's a major impulsive move. The market needs to take a staircase or a wave down, right? So it can kind of go like this, or you can look at it like this. But either way, there's going to be impulsive moves that are going to be moving to the downside, and there's corrective moves that are going to be moving towards the upside. So what we're going to be looking to do is to be looking to potentially enter on the completion of the correction. So completion of the pullback before the next impulsive move to the downside. So what do we see right here? Well, we made a major move to the downside, right? So let's talk about flow, major move. Now it's going to pull back, and I think that's something like we're going to do. key level of support, new level of resistance. So I'm not really looking at the market in a bullish sense. Looking at small term market structure, yeah, it's a nice squeeze here. We're getting a nice pop. We could see the price break this zone and come to the next level, which we can see right around here, around 1600. But I think at the end of the day, we will have sellers come in and push the price back down. That's my view of the market in gold. Not much more to talk about. Let's go to the 1 hour and discuss the potential areas. But that's basically how we're going to be looking at the markets. And then looking, we will have a move up here. We'll have some price action potential that will enter us at these highs here, maybe squeezing towards the 1600, ascending triangle squeezing towards the 1600, break the ascending support, come back, retest the 1600 zones for a valid level of resistance. Great entry if you see a bearish engulfing candle coming back down. And then this ascending green support will be the potential support that we're going to break if we want to be looking for shorts in the market. That major zone right around there. So we'll be looking for that. I can take this off the market. I can take that off, and I can take this off. Because now we had a nice hold, and now we are in a consolidation going sideways. If we break the 1550, probably going to be testing the 1600. But my bias is still that this is a corrective move to the upside, and we're going to have another impulsive move back down to the downside, breaking our ascending level of support. So we're going to be looking for that lower high structure right here, and right now we're just holding this horizontal level of resistance at around 1550. So we're going to see how the price reacts here. We're not going to be wanting to looking to long. If we are looking to long, we want to see a market structure higher high, potentially coming back and entering into a support from the previous resistance, and then you could have a nice little move from kind of here. Not a crazy move or anything, but that could be a first take profit around here if you're really limiting risk. And then if you're looking more short, that could be the short right around here if you think it's going to hold here. But for now, we're going to be remaining patient because we've only seen the price just interact with this zone. So that's my analysis for gold. Silver is in a similar situation. I just want to go over the daily because it's a very important area. We have at around $14. I think even the weekly because it's such a major zone. We can see right here, very key zone of confluence around $14. So if we do see the price come back to around this zone, I've been harping for days and days, this is going to be a major key level of resistance. From where we are as a resistance right now on the hour to that zone, we got a decent amount of space. So if it breaks this consolidation right now, we have a decent amount of space. 4% if you are trading like I am, an instrument that is a leveraged 2x, this would be an 8% move. That is something I'm interested in. If I'm only risking 2%, 2.5%, that's a risk reward I'm very, very willing to take on. And because of the market structure high, and if it holds that high or low, volume looks good, market structure looks good, price action looks good, I think that might be an entry that's worth taking as a end of a pullback here before we hit our major supply zone. Remember that major zones of both support and resistance repel but also attract a price. So this is a major zone at $14. So I wouldn't be surprised if we got a nice pullback validating this new level of resistance, which could be a good opportunity for us to get a nice capture of a short day trade or maybe an intraday. Maybe a swing trade, but it's probably going to be an intraday because we're looking at it on the hour chart. And I think if we are going to come up to that zone, it's going to be pretty swift because there are going to be a lot of short sellers going to be taken out, and it's going to be a pretty shift because it's an easy to identify zone at 1325. So there's going to be a lot of people that are going to be making decisions if it goes above that zone. Both longs coming in, shorts getting out. There's going to be shifts in supply and demand there. So that's my silver analysis. Quick look at gold and silver. We're getting a little bit of retracement. We still have 8 days until the monthly closes, so not going to be going over it too much until 8 more days, basically. Crude oil, holding that $22 level very, very well. Looking at the weekly, why is that zone so significant? Looking all the way, zooming pre 2008 here. 2000. Oh, let's just extend that. I don't know why that wasn't extended. In 2004 was when we first had that interaction. 1, 2, 3. So now we're getting our next interaction here. So I think that it could, if it does hold, that's looking like a phenomenal opportunity for a bounce there. Let's zoom into the smaller time frames because this is a major, major area of support that we're currently seeing. I do see a possible trend line that we could see right around here. So that is a possible lower high that we could see. Let's dive in on the hour chart to discuss. I think let's just try to look at different scenarios, different situations. So we see the gap, initial gap open right there. We do see a nice level where you have 1, 2, 3, very respected. I will draw that. It will be minimized because it's not something that we're going to be hitting in the near future. And I will also draw that previous one like this. Although it's not precise, I think I might just keep that one. And then we'll see kind of how it interacts. So that's going to be my main trend line. And let's just talk about market structure. I will incorporate this zone here because this is an important area that we need to understand. Okay, so we do this same market structure on squeezes of major demand zones. We play them the same or similar every single time. We have a systematic way of approaching them, right? So we're making a downtrend. And we know that this is a major level of support. Doesn't mean that it's guaranteed to hold, but there's going to be a high probability of buy activity there. There's going to be buy sensitivity. There's going to be buyers lined up there. Doesn't mean it's guaranteed to hold. Nothing's a guarantee in the markets, but we first see if there's any interaction at that level. We're not going to put a buy order right here without any interaction. That's not how we trade. We have zero fucking confirmation. There's just no point. We want to see some interaction. So we can see the price initially went here. We got rejected once, twice, 3 times. So 2 injections of buy pressure, we can say it's a valid zone. So we see 1 injection there, and now we have a second injection. Now if we play that higher low, because we made a low, a higher low, a higher low, well then there's a little bit of more confirmation that there is buyers within that market, right? But let's just kind of go into how we're going to play this. We're looking for price action, market structure, and VSA. VSA is volume spread analysis, looking at the volume. Market structure is just a series of higher highs and higher lows, or lower highs and lower lows. In this case, we're looking for either one. And then obviously just price action is price action. This current price action is looking like a descending triangle, which is a descending trend line connecting the lower highs, and we see a horizontal level of support connecting the horizontal lows that is holding the price up at a certain level. In this case, it's around the $22 level that is holding the price up. And then we see anchor point right here. We see our first touch, second touch. So what we're looking for is we're not looking to trade until this breaks. Yes, you could be trading a potential trade within the zone. So let's say if we get the price to come back here, what do we see? Zone of confluence, resistance, resistance. We're probably going to get a rejection at that zone. Pretty high probability, right? So we're probably going to get a rejection at that zone. Could be a nice intraday trade, but at the end of the day, what are we looking for? We're looking for the price to consolidate into the apex of the pattern, which is right around here. What do we do after the price hits the apex? We have 2 options. Either we're going to go to the upside or we're going to go to the downside. That doesn't mean we're going to instantly long if it breaks. Let's do our first analysis to the downside. What happens if we break to the downside? Well, the first thing, we're going to make a lower low, right? So we've broken the previous low, so we made a lower low. Market structure says that we're going to go to the downside. Price action, descending zone, breaking the support, we're going to go to the downside, right? Volume probably going to be more bearish pressure than sellers, than buyers, to the downside. We're going to be looking for that lower low. Ideally, we're going to be looking for the lower high, right? Market structure, series of lower lows and lower highs. We're looking to see the lower low, enter on the lower high. See the lower low, enter on the lower high. See the lower low, enter on the lower high. So we see a potential lower low, wanting to enter on the lower high because it's a confluence zone of the support and the descending zone we see right here. So we see a nice area where there's going to be lots of resistance there, lots of sell pressure, and we see that there is sell pressure there, bearish engulfing candles. You're looking for double tops. You're looking for wicks to the upside with long bearish candles there with wicks or some sign that there is strength to the downside. That is going to give you a confirmation. So that's how you play the downside. Now, how do we play the upside? Upside's a little bit more challenging, but we have to understand that we're currently in a downtrend. And my view is we go into the downtrend. You have to see a consolidation phase before you see a move to the upside. Yes, you can see these massive bounces like that, but I don't love trading them. That is not my A+ setup. I like trading flowy market structure. I don't like trading crazy, just straight moves like that. I like trading flowy somewhat normal market structure, I guess if you'd say. I don't like trading crazy pump and dumps like that. I like trading flow of the market, kind of what we're seeing right now. So what are we looking for? Well, if it's going to be an uptrend, we want to see this hold right here. So first thing, we got to break this zone. Second thing, we got to make a market structure higher high. So there's probably going to be a level of resistance right around somewhere around here maybe that the price is going to be holding at the resistance. Once that breaks, if we are going to move to the upside, you're going to see a higher high, right? What are you looking for after a higher high? You're looking for a higher low to form. Once that is the case, you might see an ascending trend line, you might not. That's okay. What you're looking for is for that higher low to hold, and that will be a great place for a possible entry to your major level of resistance right around here. And it's just a matter of if we're going to continue the consolidation sideways, if we're going to go like this, or we're going to go like this, break up, and then continue making the market structure higher high, and then we're hoping to hold the higher low. That's kind of the options that we have within crude oil. So we'll keep everyone updated, but right now we're not seeing anything worth trading at this very moment, other than that small kind of intraday trade, but not really a crazy possibility. All right, so the next pairs we're going to be looking is the SPY, or the S&P 500, and then also the dollar index. XRP not looking too bad here. We'll see how it goes. Quickly going to look at the dollar index. Nothing crazy on the weekly and daily. We'll try to stick with that. We're getting a little bit of resistance around the $102 range, but obviously we can see if it does break this zone, it's going to be a pretty quick snap, I think, to 118, 120, which seems like it's a lot, but looking at how fast the market's moving right now, it doesn't seem like it would be impossible for us to reach that pretty quickly. Looking at the weekly chart for the S&P 500, we're making continuous lows. Today we dropped even lower, limiting down very quickly. It had a massive volatile move while the announcements were being made for the helicopter money, and then we smashed right back down basically at the lows yet again. But let's just close the trade off here because we're not in it right there. Okay, so we can see we're still holding this lower low formation here, so we're still able to squeeze. So I wouldn't be surprised if we did get a bit of a bounce here. Let's get our projection zone because we got to fake out. So we got to incorporate that within the market structure and the price action. So there we go. So right now, we're still seeing the market structure form lower lows and lower highs, but we're seeing at least a formation where the lower lows are holding a support. But it's not looking great. It's really not looking great. We could draw another zone, kind of like so, like here. Could be a little bit bigger of a zone, but we're just forming some major lower lows and lower highs. And this bounce could be pretty big if we break this descending zone. So I will be looking at that as a potential zone to break. So I'm talking if it breaks like so, if it breaks this descending zone, I'm going to be looking for a bounce here. Obviously, that's a contrarian type of counter trend trade, but I think there's going to be bulls that are going to be looking to try to get a nibble of any sort of price appreciation here, because there's going to be short sellers taking profits for sure. You got to understand that too. There's going to be not just one type of buyer, right? So buyers are going to be, yes, people who are looking to long value investing, looking for value in a company, in an index of companies or whatever, and you're going to be looking for value for the long term, right? That's the first buyer. There could be other types of buyers. For example, if you're in a short position, how do you have to get out of the short position? You have to buy yourself out to pay back whatever you borrowed. So in this case, you know there's a tremendous amount of short sellers because the market is just tumbling down. There's an immense amount of short pressure right now. So if the market does start to come back up, what would you do as a short seller? You'd want to take your profits. You have no idea how hard the bounce is going to be. And as a short-term trader, you know that you're going to try to take those profits because you're waiting for the bounce back up around maybe 27, 28 to attack the price again. But you're waiting for that move up because you know it's, in my opinion, inevitable. Like we saw here, you saw a major market correction and then you saw push back up. Major market, or I guess this is an impulse push at this point, but you saw saw a push to the downside, a correction, a push to the downside, a correction. And look at what you see here, a major descending zone. Once it gets broken, you see a market correction, and then these corrections are vital because they usually have ascending zones attached to them. And if you're able to find a zone of confluence, we have an ascending zone breaking as well as a horizontal zone like we see here, pretty high level of confluence that the price is going to continue further down, especially with how the momentum is going. But what we're looking right now is, in my opinion, the shorts are already kind of maxed out. It's already pushed really far to the downside. The impulse push has set in too far where you're taking nibbles out of the meat of the move here. You're looking for scraps if you're shorting at this point. I think the next major potential is going to be that correction back to the upside. And then if you're going to be wanting to wait for shorts, I think it's a safe bet to wait for this ascending trend that's probably inevitably going to be coming into the market. And then you'd want to be attacking when that breaks. So that's how I'm going to be viewing the SPX. And there's not much else to go about it. Hopefully you enjoyed this global macro update. Wow, BTC is definitely seeing a lot of volatility here. Lots of ups and downs. We're remaining very patient. So thank you very much for watching this video. If you have any questions, drop a comment and we'll be sure to answer it. And if you would like to join our Discord, absolutely free to join. It is in our website. Go to our website. The link is found within our YouTube. And we got a lot of discussion on COVID-19, a lot of discussion on crypto, stocks, kind of anything general finance, entrepreneurial, all that stuff is pretty relevant to our Discord. So if you want to chat, if you think that it would be something that you'd be interested in, definitely check it out. So hopefully see you there. And until next time, happy trading, everyone.